Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Axel Ragnarsson. Thanks for being on the show, Axel.
Absolutely. I really appreciate the invite. Looking forward to our conversation.
Yes, I am as well. You have a very impressive bio, and I'm very interested to hear more about your story. I know the listeners are going to learn a lot from you and hopefully be motivated and encouraged as well just by what you've accomplished. But a little about Axel. He built a $4 million portfolio by 25 using other people's money. He's the host of the Multifamily Wealth podcast and founder of his real estate investment firm, Brickleaf Properties. So Axel, give us a little more about, I want to hear more about your background and, how do you get into real estate that quick and be that successful that early, right? I mean, just being that young, and there's all kinds of issues there that people have when they're younger in the business. I experienced some of that, initially as well. But would love to hear more about your story and just this path to success that you've had.
Absolutely. I appreciate the kind words, and I'll try and keep it short and quick. But back when I was in high school and early college, I would buy and sell cars. So that was a little business I'd run on the side. And I got to the point where I was in college and I was thinking about, what's bigger than this? What can I, buy and sell that's, more money and has more upside than maybe cars do. So I started just Googling things. I watched HGTV, so I saw the house flipping shows. And I thought, hey, maybe real estate's an interesting business to get into. So I got into real estate through the lens of I want to flip houses. And then as I started doing more and more research into real estate itself, and specifically real estate investing, I found rental real estate investing. And I said, that's probably a better model. You do the work once and get paid in perpetuity. That sounds like a pretty good deal. So I started learning a lot about multifamily real estate specifically, and how to actually buy it, especially when you have, little cash in the bank, or just less cash in the bank than what you'd think you'd need, which is where I was at. And this was in my early 20s. And then through, or probably after around 18 months of just pure research and networking, I found a small multifamily on Craigslist, a 3-unit multi.
How long were you searching?
Probably 18 months or so, okay. A year and a half, a good, maybe even more than that. Just listening to podcasts and reading articles, doing everything I could to learn the business. And an opportunity presented itself. I financed it with a private lender that I had met through a college internship. And that was kind of the start of my real estate career, I guess. And since then, I've been using what's popularized as the BRRRR strategy, buying smaller multifamilies to grow the portfolio over the last few years. And now started raising capital from equity investors, primarily in the joint venture structure, to actually scale the portfolio, buy some larger buildings, and pour some gas on the fire. And that pretty much brings us to today.
Awesome. Well, it's an incredible story, but it's neat that you kind of had that entrepreneurial fire, in high school and buying and selling cars, and were you making any money doing that while you were doing it then?
I was making some money. I look back, I thought I was making a ton of money at the time. And then you look back and you think, I was doing a lot of work to make $500, $600, $700 here and there. But I just didn't want to work for someone else. So I was like, what can I do on the side to make some money? And that's what it was.
Okay. So you looked for something that had more upside, more money that you can make from turning something over like that, buying and selling, and in came real estate. And first you thought flipping, which a lot of people do, you think, oh, we'll start there. But then it was, let's do multifamily, so you have more recurring income. But I want to hear a little more about, that relationship or how you got financing. Because I know a lot of people, they get caught up there, right? They can't get started because they can't get the financing, or they can't get to the next step because they don't have any capital of their own to put in. And so a lot of people will quit there. How did you make that happen?
Sure. So the quick backstory is I did a college internship for a small angel investment group. There's a group of 10, 15 guys that were investing in startup companies. And it was a great internship. Obviously great connections were made there. And one of the guys that was in the group also did private money lending. And this is really early when I just started thinking about getting into real estate. So we just had casual conversations, 5 minutes before, 5 minutes after the the monthly meeting they had where entrepreneurs would come in and pitch. And, my role is I'd basically take notes for the meeting and then distribute it after. And started learning more about, what he did, what private money lending really was. So I just kind of lucked into understanding that piece of the real estate business really early on. And, the biggest challenge that I faced was, despite the fact that I had a relationship with this person, it doesn't mean that they're going to lend on a deal that I find, right? There's a big gap between knowing someone and having them trust you enough to lend you money. So basically what I did was I just, kept him apprised of what I was doing for over a year. And I was looking at deals, I was evaluating deals. It wasn't like I was, meddling. I was spending, 20, 30 hours a week on top of everything else I was doing, just learning real estate, underwriting deals, making connections in the industry. And soon there was some common connections that I had with him, trusted, individuals that were, well-known in the real estate business in our local market. I was just talking to him about deals all the time. So it got to the point where when I did actually find this deal, this 3-unit property on Craigslist, and I brought him the numbers and I said, hey, I'm really confident that this is something that makes sense. And he said, you know what, we've been talking about this for so long, you're ready to actually execute on something. So, the takeaway for me is that you have to share what you're doing with folks that could potentially be lenders when you're starting out. The more that people understand that you're spending time in the business and becoming more and more proficient with real estate as an actual business, then I think they're going to be more likely to lend you money. So that's what I prioritized early on, was just really documenting what I was doing and sharing it with the folks that I might want to work with.
Interesting. So you're sharing, otherwise people aren't going to know that you're pursuing this, right? And they may have an interest as well. And it's never even brought up if you don't talk about it.
Exactly. Yeah, no, you have to share. It's really important, especially when you want to raise money, because you need to kind of, passively build that trust, whether you're raising money in the form of equity in a syndication or some kind of partnership, or it's a private money lender. Both, you're raising money in both situations. They're just paid back in different ways. So it's, you have to develop that authority in the space. And it's hard to do that when you start. So you have to be patient and put time into it, but make it a focal point of what you do.
Let's talk a little bit about, your lead generation strategy and how you networked and how you started growing your brand and your business, and whether that started, what you were thinking then about lead generation and networking and those things, maybe even compared to now, and how you've learned and grown that way.
Absolutely. So when I was starting out, right, I had time. I was a college student. I had time to hustle and, pound the pavement and talk to people and look for deals online and underwrite deals. And, something that I focused on early on was building some lead channels that weren't the MLS, because this is 2016, 2017. And, it was competitive then. It's competitive now. You're not going to really find anything that's publicly listed. So in my space, which at the time was 4 to 10 unit multifamily properties, they were smaller in size. I really prioritized networking with the owners in the market that owned numerous properties, and I took a really long-term approach to that. Just grabbing coffee every 3, 4, 5 months and just checking up on their business, letting them know that if they were interested in selling, that I was a buyer. Doing the same thing with the brokers that typically sold those properties. And then I did some more active and paid marketing and prospecting. So I did direct mail, and I actually did a lot of email marketing. And marketing might not be the right word, but email prospecting, where I'd find the owners of a building, get their email somehow, Google search, skip trace it, find what the contact email was in their LLC, however you can grab it. And I just reach out and start, I wouldn't reach out saying, hey, I want to buy this place. This is what I'm going to offer. I'd reach out with the goal of trying to build a connection. So I'd reach out and say, hey, I'm a local investor. I'm interested in buying more in the Manchester market. If you're interested in selling, certainly give me a call. If not, great. I'd love to, to meet and grab coffee and, get to know you, since we're both doing the same thing. So took a really low pressure approach, I guess is a good way to classify it. So a combination of all those things, built a lead funnel that basically outgrew the capital connections I had, which, led me to needing to raise some money. But that's, I placed a conscious focus on those few main areas. And in the multifamily space, you'll find that networking is like probably the greatest way to get the deals, comparatively to the more transactional business of single family homes, where one owner is probably just going to sell you one house in their lifetime. Whereas in the multifamily space, you might have an owner that's looking to sell his 6-unit building, but he's got another 80 units in his portfolio that he's looking to sell at some point. So I placed a focus on developing the connections with the people that had the buildings in my market. And then, they called me when they wanted to sell.
Nice. I think it's so smart. So smart. And that's just another reason we like multifamily as opposed to single family. And it's so true. The relationship component of, especially syndication business, every aspect of it is relationship and team, business. But even that aspect, that a lot of people don't see or think about that relationship as much, but it is the sellers. You're right. A lot of them have been in the business many, many years, and they have numerous properties, and they're not just going to sell this one. Eventually they're going to sell all of them at some point in time. And so, tell me a little more about how you could just created that relationship. What would that look like? I know you mentioned like sending an email, maybe going out to coffee or, something like that. But, is it like reaching out at once a month? Was it reaching out every week or 6 months or, following back up? How did you finally bring up the property, or how did you share with them that that's, what you're into as well?
So I tried to prioritize providing value at as many touch points as I could. And I'll try and explain that a little bit further. But when I'd initially reach out, something that I would do is I'd put together a newsletter for the marketplace that was multifamily focused. And it includes I'm licensed, so I have access to the MLS. So I'd go on there and pull a lot of the data for multifamily sales in the area over the last quarter or over the last, half a year, 6 months, whatever time frame. And I packaged that with some maybe key transaction or key events in the market. Maybe there's a new 250 unit multifamily development, right? I think that's something that anyone who owns a multifamily, regardless of the size in that market, might want to know about. So I started pulling information that I, as an owner, might find helpful. So when I'd initially reach out, I'd attach that newsletter. And at least now it's not completely salesy in terms of the message, right? There's some value being sent, I'm making it known that I want to buy, and I'm making it known that I'm interested in building a relationship rather than I'm just rifling out emails or, messages to, Craigslist for rent ads or something like that. Basically, every time I reached out, I wanted to bring some value. And then after that, I basically put all the contacts I had in the marketplace into a CRM and the addresses of the properties that I knew they owned. And basically I'd give myself reminders every 3 to 6 months, reach out to this person, they own this property on 123 Main Street. I try and do some research to see, hey, maybe there's something that's sold that's a similar type of building to the one that they own. And, maybe they'd be interested in knowing what the new comp was in the area or something like that. Basically, I did a lot of the things that brokers do. But I basically, applied it as a buyer rather than as a broker. So I tried to reach out, provide value as much as I can. And I think that's not something that a lot of people do. So when I did do that, it's another reason to just reach out and gives you another reason to stay in touch with people. So that was really the big thing I did in terms of building those relationships, more so than just, completely cold outreach where it's hard to build something off of that.
You think those techniques you learned from getting your license, or, how did you really pull some of that stuff or where'd you pull it from? How did you learn to do some of that?
Yeah, that's a good question. I think it was really just, brainstorming how can I differentiate myself from all of the people that are contacting these owners looking to buy their property. When you're looking at direct mail, that's a conversation a lot of people have. How can I tailor my direct mail message so that it stands out amongst all the other pieces of mail that, whatever, even in the single family space, that's something that flippers are always thinking about, or wholesalers, right? And in the multifamily space, these folks are still getting mail, and they're still getting, contacted quite a bit to buy their property, especially those that, have owned it for a long time, maybe have a mortgage with a low balance. Like, they're on a lot of lists. So I try to think, what can I provide them that's going to make me stand out, and something that's easy to put together, and then I can, do so in a scalable fashion. So, a quarterly newsletter, that's a really easy thing to do. You spend 10 hours a quarter building it out, run some data, grab some of the key events in the marketplace, throw it on a, 1-page Microsoft Word, convert it to a PDF. There you go. Now you have something to attach to emails. So it really came from, what can I bring on the initial touch point that's different than what everyone else is doing? And I kind of just worked backwards into, what would I want to see as an owner, right? If someone was reaching out to me trying to buy my property, Like what would make me click their email? What would make me look at their direct mail? Probably a newsletter that's included. No one's doing that in direct mail, right? Because it takes more effort and it's not as scalable. So I basically worked backwards into what would I respond to.
So I know you are also into content creation, and I'd love to hear, like, why content creation? Where's your company? Brickleaf Properties. Where are you headed, and how's content creation helping or coming into that? What's your plans for the future?
Sure. So similar to putting together newsletters to actually give to a multifamily owner, I think it's important to provide value just across the board. This is multifamily real estate. When you're in it, it starts to seem like a crowded space. From the outside, it may not look so crowded, but when you're in it and you're all chasing after the same properties, you have to figure out a way to differentiate yourself. And like we talked about earlier in the show, networking and relationship building is, probably the most important determinant factor if you're going to be successful in this business or not. If you're going to get the deals, if you're going to raise the money. So I tried to think about how can I do that in a more scalable fashion rather than spending 30 minutes on the phone, 3-4 times a week with someone, right? That's hard to scale. Using social media, building an email list of folks that I'd like to know, starting a podcast, that's all a great way to get people that maybe you didn't have access to, on the phone, or, maybe you would have access to the other people, but you wouldn't have the time to speak to them all at the same time. So for me, being, passively discussing real estate with folks is important. For example, posting on LinkedIn, right? If you post on LinkedIn once every couple of weeks, you're doing more than 90% of the people in the real estate business are doing. And if you're connected with the right people, they're just going to see your name come up on their feed. Maybe they don't have anything to sell you right now. Maybe they're a broker. They don't have any deals to send you right now. Maybe, if they're a seller, maybe they don't want to sell their portfolio or one of their buildings right now. But at some point they're going to remember, right? Because you're passively in the back of your head and you're top of mind that you are someone that they need to speak to. So for me, it basically was the question of how do I grow my network in the most efficient way, and creating content and distributing it in a scalable manner. And that's, social media, through Instagram, through LinkedIn, everything like that. That was the answer for me. So I started placing a priority on that, and it's really changed my business for sure.
What were a couple pieces of content or types of content, I should say, that you were focused on, and what was your goal with that? What are you after, by doing that?
So one of the big things I did early on was basically catalog and document deals that I did. So if I was buying a deal, I'd talk about why I was interested in buying it, what the numbers were, what our business plan was. Maybe it was a deal that was already completed. I talk about the same things, but I talk about the end result. So basically I wanted to catalog deals and distribute it in a way that other people could look at it and say, hey, I want to be involved in a deal like that, or I want to work with someone who's doing deals like that. So it was really just an easier way to gain access to capital is really what it was. And again, right, all the way back to the first point in the show, documenting what you're doing is really important because it helps to build trust in an easy way, because not a lot of people do it. So that was really goal one, was let's talk about the deals I'm doing. Let's talk about whether they were equity investors or debt investors, what their returns were, what their participation looked like. And, it's not asking for money. It's not a post saying, hey, if you want to work with me, shoot me a message. If you want to earn, 18% on your money, shoot me a message. It's basically saying, hey, this is what we do when we raise money, and it organically causes people to reach out to you. So that was goal one. And the other goal was anything that could build authority in the marketplace. So, there was a post I did on Instagram that went semi-viral, however you define that, but it did better than the other ones I posted. So I'll call it viral. And it was basically, these are the 10 things we did to this property that added value. And I talked about the unit renovations we did, down to the material, down to the exact cost, down to the exact rent premiums they achieved. Talked about how we reconfigured floor plans to add square footage to the kitchen, and how that now comps us out with a different rental grade unit in our marketplace, and just really tore into what we did at a meticulous level. And someone who's looking at that's going to say, okay, this, from afar, this operator seems like they know what they're doing, right? When it comes time for me to maybe want to invest some money into real estate, that's someone it seems like I should talk to. And that's kind of the lens I took. So adding value without expecting anything in return is really the key in terms of a lot of the content that I create. And then just documenting what I'm doing to make it easier to talk to people about raising money or finding deals.
What's been the hardest part of this real estate journey for you?
That's a good question. For me, it was a lot of mindset stuff. I found myself hanging out in the same, space for too long. I think, I only looked at 2 to 4 unit multifamilies for, 2.5 years. And I look back, I'm like, there was no reason I couldn't have done a bigger deal than that. But a lot of it was, I had a tough mindset when it came to raising equity specifically. Private debt was easy to find. But as it related to raising equity, that was the tougher piece of the equation. Because in my mind, I said, who wants to leave their money in a deal for 5 to 7 years? That was a question that I had a hard time grappling with. And it wasn't until I started talking to the right people that were raising that kind of money and actually just talking with a lot of investors that invested in real estate who basically said that, the time horizon is irrelevant. We care about good risk-adjusted returns. We want our money in real estate. We don't need it back at any point in time. That was the limiting belief I had, was who wants to invest money actually in a deal where they don't have a set exit, usually within a year. So that was a tougher part. So it made raising money harder for me early on in terms of raising equity. That's since something that I've gotten over, as I've spoken to so many people who are like, we invest way more money in real estate if the deals were there. So that was probably the toughest thing I dealt with early on.
I appreciate you just saying that, because mindset is so crucial. I was just thinking about it during the show too. I mean, that was a big change for me. I know, and I contribute some of that to military and law enforcement training, and just the mindset to keep pushing forward and all that. But so difficult to get past. And whether it's just changing your vision, like you said, from 3 to 4 units to really believing you can do something larger than that. Or just being willing to get kicked in the face and be able to keep getting back up, right?
Exactly.
And keep going. So what's a way that you've recently improved your business that we could also apply to our business?
So my portfolio consists of a lot of smaller buildings, a lot of buildings that are 3 to 10 units. In aggregate, it's a more sizable portfolio, but it's harder to manage than, one 15-unit apartment complex or something like that. So something that I've really had to focus on doing is maintaining a good handle on the operational side of the business on an ongoing basis. So something that I've recently done is bi-monthly kind of portfolio assessments, where every 2 months I go and look at every property I have. And I just look at the expense ratios. I look at what the rental income is. I look at, where the actual money is going in terms of the expenses. And I try and find anomalies throughout the portfolio on a more consistent basis. Previously, I got a little lackadaisical with that. I'd look at it maybe quarterly or semi-annually. I'd look at it on a monthly basis, but I wouldn't really look at it. And now I catch things faster. Now there's, when units are lagging behind market rent and my property manager, maybe they renewed a lease without a rent increase 8 months ago, and we're looking at another lease expiration in a few months. I have better plans for a lot of that stuff. And I also look to where we can spend money in the portfolio that's going to drive better ROI. So I think as real estate investors, we look at, what's the return on my money on it as it relates to a new investment, buying a new building, investing in a new syndication or something like that. Whereas we don't look as often within our own portfolio as to, can I spend $5,000 within this asset and what kind of return am I going to get on that? So, for example, like something that I've recently started doing is spending more money in our common areas in the buildings that we own. Usually we'd make them nice. We'd paint them. We'd replace, windows or something like that. But we've recently started putting in new LVT flooring in our common areas. And we think that gets better rent increases through every unit in the building. That's just one example, but it's somewhere to spend $4,000, $5,000, $6,000 and actually see a payback on that in a couple of years, which is just going to be a better return than going out and buying a new property typically. So that's something that has, changed my business the last 12 months, is looking inside of the portfolio rather than out of it to find the best ROI on the cash that we have available.
What's your best source for meeting new investors right now?
I mean, RIAs have always been the best for me. As it's funny that, yeah, real estate investing meetups. That's how I met most of my, network early on. As you start to do bigger and bigger deals, you have to find new groups to join. So I'm constantly trying to find groups of individuals that are playing at a higher level than me. I still think that's the best way to network. And being active on social media is actually a great way to grow your network. Whether it's LinkedIn or Facebook or Instagram, whatever it is. And that's how I've been meeting a lot of investors, outside of my market too, which has been beneficial for me. So, social media, RIA meetups, I think those have been the best. I would say the email prospecting that I did with the goal of finding properties was also extremely helpful in terms of growing a network, because just putting myself in front of all the folks in my marketplace that are doing the business. And that actually has that's helped grow my network quite a bit.
What's the number one thing that's contributed to your success?
Prioritizing consistency and blending that with patience. So identifying the things that move the needle and just doing them for a long time without expecting any results. I mean, this is like a business where it's going to take you a year and a half to see any results that are going to change your life, probably. If you do it faster than that, great. Like, that's the exception. That's not the norm. So really understanding that as I do all the things that I do on a daily basis, or did, to really get the business off the ground initially, was, I think, really key. And just identifying what moves the needle and doing it every day. I think it's as simple as that.
Consistency and patience, no doubt about it. That's my story right there.
Yeah.
In 2 words. So how do you like to give back?
So I try and provide as much free real estate content as I can on social media, help people get ahead. I try and be as generous with my time as I can. I love to just speak with investors regardless of where you're at in your journey, and talk about, how you can get ahead. In our local market, there's a number of groups that are really trying to turn around some of the lower income areas in the city where a lot of real estate investors invest. So I try and be, generous with my time as it relates to that, and donate to a lot of those groups too. The local Manchester, New Hampshire is the market where I invest. I grew up, just 15 minutes south of that. And it's historically been a rougher area comparatively to the rest of the state of New Hampshire, which is a small market itself. But it's recently been becoming a really nice area to live. And I think there's a lot of pride of ownership, especially with the folks living there and investing there. So that's something that I take some pride in.
Well, Axel, it's been a pleasure to get to know you a little bit and hear about your story. I know there's many listeners that can relate as well. I know I can as well. And I appreciate you just bringing up the mindset and the consistency and patience. I mean, it just goes a long way if you can have those things in order. Tell the listeners how they can get in touch with you and learn more about you.
Absolutely. So you can find me on Instagram at Multifamily Wealth, or you can just search my name. I'm sure it'll come up. Connect with me on LinkedIn. Again, search my name. It's pretty unique. There's not too many Axel Ragnarssons out there. And then I also host a multifamily focused podcast called the Multifamily Wealth Podcast. So any of those avenues is probably going to be the best to reach me.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.